Hi friends, today we'll discuss what is loan settlement. So what is loan settlement? Means customer or borrower, he is not in a position to repay the monthly EMIs because of his financial issue, or he lost the job, or he got a loss in the business. So in these conditions, borrower or customer will approach the bank or financial institution, the lender, to settle the debt or settle the loan. So normally this will happen with mutually agreed. So bank and customer both should agree for this settlement. Normally whatever the settlement amount will be less than the outstanding amounts. So it is a loss for the bank or a lender. So normally they will normally they will discourage these type of settlements, but some situations, instead of getting a big loss in the future, with a small loss you can settle the loan and it will be adjusted to the profit and loss. Okay, so that whenever a borrower requests for a bank for the settlement, you should give a genuine reasons and you should give a proper reason for one time settlement, then only settlement will be considered. What are the steps? First, borrower or customer, he has to intimate or he send a written request to the bank or financial institution to the lender for the one time settlement because of genuine reasons. Normally that settlement amount will be less than the outstanding outstanding amount. And first, bank or financial institution, they'll waive interest, penalties, whatever charges, they will give a waiver. Then they'll go for the one time settlement amount. Sometimes it may be less than their outstanding principal also. But whenever account is settled, it will impact the customer CIBIL rating. So what is difference between a closure and settlement? Settlement is like customer is not position to repay the amount, so he has gone for the settlement. He got some waiver of penalty, charges, interest, then he paid less than the principal outstanding amount. So it is a loss for the bank. So this is called settlement. Because of settlement, negative credit behavior of the customer. So when lender write offs, it will be risk for the bank because he will get a loss. So for the customer, credit score will be decreased and he applies for a future loan. These loans may be rejected. Okay, but closure means customer is willing to repay the full amount before the maturity, or on the maturity, or before the maturity he want to repay entire amount. In this situation, customer credit worthiness will be increased and a good repayment track will be available for the customer. These can be exchanged with the banks whenever you go for the new loan. So a new organization or new bank or financial institution, they will verify, yeah, this customer has taken a loan for 10 years, but within 5 years he has repaid. So he has a good repayment track record. And future loans, if he avails any future loan, easily these will be approved. So credit score, for the settlement of accounts, credit score from 75 to 100 points it will be decreased, and this will improve continuously. You are paying other loans, other EMIs as per the schedule, and if you maintain good track record, then your points will be increased. So how to avoid the loan settlement? Instead of settlement, you can borrow money from your friends or family and you can repay the loan. Then your track record will be good and your future loans also will be uh, future loans will be approved. And if you have a savings or any investment, you can liquidate and you can repay the loan, or you can go for the Normally if you are going for the personal loan, credit card loan, it will be 22, 23, 24%. You can go for a gold loan and you take this money and you repay the personal loan. Okay. Otherwise, you ask the borrower, you ask the lender or bank financial institution restructure the loan, because right now it is 5 years loan. You can ask for the 10 years so that your EMI amount will be less. Easily you can repay and you keep your track record positively. Or some other situations, you link insurance with the loan amount. If something happens to you, you can claim the insurance amount and you can repay the loan. So, how to avoid falling into debit trap? So, normally what happens? You have repayment capacity for 50,000, only take loans up to 35,000 or 30,000. So, 20,000 for your monthly expenses, and don't go for, if you take one loan, to repay this loan, you take another loan. You avail first credit card. To pay the credit card, you will go for personal loan. To pay the personal loan, you go for the buy and now and pay later scheme. So, you will be, finally you are not paying, just you are managing the loans. So, don't fall in this debt trap. Okay. So, improve your credit score, take small loans and close that loan and take a new loan. Okay. Like that you can improve your credit score and avoid the falling into the debt trap. Thank you friends. If you like my video, please subscribe my channel. Please like my channel. Please comment